Okay, guys, today we have repeat guest Udi Wertheimer. Really needs no introduction. Udi tweeted recently, you said, I have been basically wrong about everything in this market. So like maybe, yeah, start with like, what were you alluding to? And then I'll take the other side and say that there were a lot of things that I think you did see, that others didn't or weren't paying attention to. But like when you said that, what was going through your head?
The way that I said it was, I think it was something like, I don't think there's anything that I wasn't wrong about. So there was like 3 negatives in there.
Okay.
And most people, you're just scrolling through Twitter. So most people read that as, I don't think there's anything I was wrong about. So like most people thought that I was saying I was right about everything. So I got like hundreds of replies of just people like naming everything I was wrong about. Like, no, you were wrong about this. And I was like, yeah, I wasn't wrong about this tweet though. Like, read it again. Anyways, man, I mean, there's the infamous like 400K hypothesis for the end of 2025. I think we can agree that's probably not going to happen.
Well, okay, so you were closer to 400K than Tom Lee was to ease 1,000, right?
Oh man, I did outperform Tom Lee this cycle.
So there's time to be said about that.
Yeah. Yeah, I also outperformed Saylor, I guess, so far. Anyways, yeah, there was that. That was the big one, right? I'm trying to remember. Before we had this call, I actually thought about another one that was embarrassing. I don't remember what it was now. Whatever. There's been like, there's been a lot of shit. I mean, I really thought that Bitcoin will lead overall,
Yeah.
and I mean, for a while, I guess it did, but it's definitely not now.
Yeah. So I think that what I was going to say was quite some time ago now. This is like leading up to the bull market. You said there would be kind of two types of people who, I'll phrase it like this, have exposure to Bitcoin. And one category would be ETFs, custodial, not ideologues by any means, people who have it in their 401ks, people who have it in IBIT, and then strategy. I think that like put that wide bucket there. And then the second group would be these like on-chain enjoyers. At the time, obviously, was the ordinals. So like that was what you were alluding to. I think certainly you nailed one side of this. There was a lot of discussion
on the institutional side, yeah.
Yeah, so you definitely nailed that part. And I think the reason I bring this up is because I do think that split has been pretty real and obvious, and it doesn't appear as though there's a lot of growth in the middle ground of L2s, like semi-trustless, all of these things that were like this notion behind Bitcoin season 2, right? Like that didn't really come into fruition. But so I guess I give you like half marks on that. But you were correct that there was going to be probably just an ever decreasing number of these self-custodial, and at the time, the laser eye like vision, right?
The classic Bitcoin maxis, yeah.
Exactly. So that part's come true. But what do you make of maybe the sort of, I don't know, just the like on-chain and then the scaling and all of this stuff? Like, what do you make like now looking back over the past 2, 3, I don't know. I mean, you've been here so long. That's why I think it's good perspective. But like, what do you make of this most kind of the recent ongoings in Bitcoin?
It really changed everything, didn't it? I think that, Saylor and other institutions, I think literally physically bought out a lot of the traditional holders. Like they literally just bought them out. And that's a big part of why you just don't see them anymore. They just moved on with their lives. It's not only that they lost the narrative or they did, but it's not just that, they also literally left. Many of them. The entire L2 thesis doesn't look super promising right now. Not on the Bitcoin side and not anywhere really. Right. Not on Ethereum either. Right. But because who's been newcomers to Bitcoin in the last 3 years? people buying IBIT, I guess, and MSTR and stuff. Nobody's like, oh, I need a faster way to move my Bitcoin on chain. Like, why? Or I need to have a vault with my BTC in it and borrow against it. Like, who is that person? I don't think we ever had an answer to like who's that person who's looking for this. And meanwhile, like big holders, they were finally able to just go to TradFi. They were able to, buy Bit. I want to say IBIT. They were able to borrow against IBIT and actually like be part of the real economy for the first time after like 10, 20 years. So why would they do it on like an EVM chain?
Yeah. I think that also there's something that was very elucidating for many, which was that, and you have a lot of context here, which is that like there was always this idea that everything useful would come to Bitcoin eventually, and that
it did.
Right. Well, yeah, there's just so that useful right things. Exactly. The lack of like expressivity, the lack of the ability to do things with your Bitcoin. And I think you did point out something at the time. Another thing I'll give you credit for, and this was among, some things you kind of went a different direction with. But one thing you pointed out, which was that the reason, and somebody said this to me, actually, Alex from River said this to me recently, and I think this is very, very true. And I don't think people really understand how true this is, which is that the vast majority of people self-custodying outside of Bitcoin, all the people we talked about in DeFi and Ethereum and Solana, they were self-custodying because they had to use a browser wallet.
Yeah,
and
that's such a good point.
What happened though, which you now kind of have alluded to, is that once it came to TradFi, you didn't really have to do that. You can take out a loan against your IBIT on Robinhood, on Schwab, on Interactive Brokers, like all of these. So it was really like this chicken or the egg thing when we kind of overemphasized the chicken, or we overemphasized the egg, when in reality it was that like this was something that people couldn't do otherwise. But I am curious, like, so the funny thing about this, and this is some context people probably don't have. I heard this podcast with you and Eric before you guys were even working together. It's probably like 2016 or 2017, and Eric was very bearish on Lightning at the time, and you were also bearish on Lightning. But Eric was very bullish on rollups, and you weren't particularly bullish on rollups either. So I will give you credit for that. But I'm interested, like, why have we? So I mean, we've kind of explained it, but will we see any resurgence in this, like in the desire to use on chain? Like, is this purely fringe now? I think I sort of know your thoughts, but I wanted like to hear you kind of like maybe expand a bit on. Is there any more development to be done? You know what I mean?
Yeah, there was I had this eureka moment a few years back through some super obscure thing. Maybe, do you remember the DYDX was a thing once?
Yeah, of course.
It was like one of the precursors to Hyperliquid. It wasn't like overwhelmingly successful, but it was a little bit successful.
Yeah.
And it was using, I think it gained some popularity after FTX blew up, if I remember the timing correctly. And at the time, they were using some tech developed by Stockware. It wasn't the Starknet layer, it was something else, but it was some tech developed by Stockware. And they made this decision to migrate to basically a completely new rewritten thing that they were building from scratch. I think they called it DYDX3, if I remember correctly, but whatever. And the thing that caught some Ethereum maxis off guard at the time was that it wasn't an L2. It wasn't an Ethereum L2. Like, everyone expected them to migrate to Starkware's Starknet L2, and instead they were essentially building an L1. And at first glance, it seemed like to not make sense. At the time, people were super bullish on those L2s. But I had this moment of realization where I was like, wait, why would they use an L2, the only asset that you could use on DYDX was USDC.
Yeah.
You couldn't bring any other asset in. The only collateral that was supported was USDC. Why do you need to be an L2 of Ethereum if the only asset is USDC? USDC can just be issued by Circle directly on your L1. You don't need the security guarantees of an L2. The whole thing is irrelevant. You only need an L2 for Ethereum if you're going to use ETH, and you only need an L2 for Bitcoin if you're going to use BTC, and you care about the security guarantees, which no one does. But assuming that you did, that's the only reason. If you're only using USDC, then why on earth would you go through all the trouble of using an L2? And what happened is everybody's using USDC for everything on chain, right? So the of that group of people that are using on chain things, which is already not exactly growing, but that group, all of them, 100% is using USDC. Biggest news to Hyperliquid recently was this deal with Coinbase about kind of clarifying the situation with USDC over there. But USDC is the asset, is the collateral asset. You can deposit like other assets, but they're converted to USDC. It's like that's it. That's the asset. So if the asset that everyone is using is USDC, why do you need L2s? What are they doing? What do they do? So I think that's really the why. I think it's those L2s optimized for some idealistic future where everybody uses ETH or BTC as money, as day-to-day money, and they also care about the security guarantees of that for some reason. And both of those things turned out to not be the case. So obviously, if the standard asset that everyone is using is USDC, then you don't need L2s. They don't.
Yeah.
There's no point. There's no reason to exist.
Going back to when you got into Bitcoin, which was quite early and much earlier than most, have you changed your mind about the viability of the long run? So the reason I ask this is because this is the first cycle, and like this cycle has been very different for many reasons, right? Like there was really very little engagement with altcoins, like for in aggregate, relative to 2021. Obviously, that's like an anomalous period in history, both literally and in crypto. But there was not like just insane returns in altcoins in this most recent cycle. But with regards to
coins, I guess.
Well, yeah, that exactly. That was like the one, but those were like very. There was much less ideology behind them, which is sort of a separate point. But there really wasn't much substance there, and there was a lot more people who recognized there wasn't much substance there. Like whether that's good or bad, it's sort of beside the point. But I would at least say that. What I'm curious though is this is the first cycle really where I've heard some people who I've considered to be, I don't know, like this is a very nebulous term, but true believers in the sense that they really believed that Bitcoin was going to be this apex asset, that it would suck up all of the idle liquidity, and it is up only in perpetuity. And I've heard people slightly change their tone in a way that I haven't heard before, and I'm talking about Bitcoin specifically here, in saying that it feels more like just another asset, right? It's just something you have as a portion of your portfolio in your 401k. It's gold 2.0, and even that is a bit of a stretch, right? And that's something that I hadn't heard. And the reason I'm singling this out is because these are people who I didn't expect to have those sentiments. So you have been here for quite some time. Do you echo those, or do you I guess, how do you feel about Bitcoin for the next 5, 10, 30 years? Like where are you, I guess, in your mind?
I think, when I started getting interested in Bitcoin, I think that was the main talking point at the time, and it was obviously a much smaller community, but the main talking point at the time was mostly around payments, I think. Like people believe that, you would use Bitcoin in the grocery store and stuff. And that was the story, right? And that was the thing that people believed when they joined. And I guess my point in saying that is that I think the story always changes. Like this idea of Bitcoin as this apex asset that swallows everything else is relatively new. And when I say relatively new, I mean like, I don't know, maybe 5 years.
Yeah.
So, and it's possible that it's getting to the point that it's disappointing people a little bit. Yeah. But that's also, I just think it's natural. Those narratives can only carry you so far. I don't think Bitcoin ever had a correct narrative, and that's true probably for most assets. Like the narrative has to change. It's never like fully accurate. And I think that will probably happen again. Yeah. That said, like we're only in that. I feel a little bit like like David Hoffman saying this, but like we're only in this position where we're upset and disappointed because we kind of already won. And I do think that Bitcoin is, I mean, definitely if you think like 10 years back, 15 years back, it was unthinkable that Bitcoin's going to be at 60K and people are going to be depressed about it.
Yeah.
So like that's a pretty big win. But what is the next step? I don't know. I never knew, to be fair. I was never able to articulate that very well, like what was going to happen next. I don't know. I do think that it is a unique asset, and I think it happens to it always kind of manages to find a sneaky new way to get into people's heads. But I've never been good at predicting what the next narrative is going to be.
Let me take a moment to talk to you about Ellipsis Labs, a team I've known for a while. The Ellipsis team is one of the few that I can consistently point to and say, these guys really know what they're doing. Ellipsis Labs brought capital-efficient order books to Solana and started the Prop AMM revolution with SolFi. Altogether, they've saved retail traders tens of millions of dollars by reducing slippage on spot markets. They're bringing the same level of expertise to perpetuals with Phoenix, which is live today. Ellipsis Labs is backed by Paradigm, Electric Capital, and Han Ventures. I would consider them the foremost experts in crypto market microstructure. The best part is that Ellipsis Labs is hiring for New York-based engineers. Work with a small, focused team who are results-driven, collaborative, and use a modern stack. If you're an engineer looking to work with a DeFi team that's already proven itself in the market, go to ellipsislabs.com/careers.
I'm obviously like still quite bullish. So, but I'm also I'm resigned to a very okay if it doesn't work out for whatever reason, right? So like I think that a lot of times people who top blasted in 2021, I very much understand them feeling left behind in many ways, and also relative to just holding the SPY, which like has a much lower risk profile. It's hard.
Yeah.
And the thing about it is it is hard to crack like that narrative, the narrative that, incentivize you to call for 400K. Those adopters, right? Like they're not happy, and it's hard to see what the next one is a little bit for the time being. We're in like maybe the 4-year cycle. It seems like it's at least still more or less on track. So maybe
when those things flip and like when people come up with the narrative, it happens very, very quickly.
Right.
Look, this last cycle we went from 15K to 120K. That's not bad. That's not bad at all. And mind you, people were convinced that the entire industry is dead at the bottom. Like people were genuinely convinced. So those things change very, very quickly. When they do, you rarely have time to catch up. And obviously last time it was impossible to imagine what would get us out of that dump. But, that's just the way it works.
Yeah, I think, but so then, and I've kind of said this now multiple times, but like, I think that the run to 120K, a lot of us, myself included, I didn't expect a drawdown to 60K. I thought that volatility had been stripped from the market through IVIT, through MicroStrategy, through, like a lower velocity holder, right? People who weren't likely to trade. And so that drawdown was surprising. And now this chop, it feels like if I was selling Bitcoin to somebody right now, it would feel difficult to tell them that, the upper bound is 700K, right? Like a 10X from here. That feels difficult for the time being. I'm in agreement with you. People don't really acknowledge that we went down to 15K and then up to, like, we almost pulled a 10X almost, but there's, that seems like a difficult sell at this point. So
of course,
I'm sympathetic to, I guess, both sides here. You brought up like the stablecoin aspect, which I think, is very true. And people using stablecoins now as really the medium of exchange has very much called into question, the either utility or the value proposition of a lot of crypto assets. That
what is Sol for? What is this? What is it for? If whenever you use Solana, you use it with USDC, then what is the point of that coin?
You have some thoughts on stablecoins. I think there's maybe a little bit unique to others. Like, do you see the proliferation of, because I guess you and I have chatted and like we're both, we live in the first world and we get this like stablecoin thesis shoved down our throats. And it's somewhere between, I'm like either neutral or extremely disinterested to annoyed with this, because at some point it's like, this doesn't have a tangible impact. I mean, if anything, right now I'm excited for Hyperliquid for the sole purpose that it's taking away some of the mind share from getting 100 stablecoin chains shoved down my throat. You know what I mean? But so like, where do you think the stablecoins lead us? I know you're bullish, but maybe not in the same way that most people are. I don't think you have like some. I don't think you're hyper bullish on stablecoin specific chains, right? Or it doesn't seem this way.
Yeah. So I cannot bring myself to believe the story of everybody will use stablecoins in third world countries, just because I've seen this story. I've seen this narrative so many times trying to play out, and like nothing comes out of it. And people also said that that's where people will use Bitcoin, and that's where they'll use Zcash, and that's like, okay, and with stablecoins, and I'm not saying nobody's using it. There's absolutely no doubt that there are people in third world countries that use stablecoins as a way to get exposure to the dollar, basically. That is definitely true. And it's used in infrastructure in some ways. Like if you want to deposit and transfer dollars between apps and whatever in Argentina, then a good way to do that would be with stablecoins, just because they don't have kind of a government sanctioned way to do it. So that is real, but also I don't think it's I don't know. I don't think there's like a lot of money in doing that. It's like, it's sure they're using it as an alternative when they have to, but at the end of the day, they also, they use it to charge credit cards and debit cards, and they pay with the debit card. Like it's just and that's fine. I just don't think that on its own is like a super interesting. Like, what do you do with that? Like,
no.
Okay.
And it's super low. Like just to second what you said, is a lot of these things are what I view as like a very rapid race to the bottom, and not a very high margin. It's like you can look at Hyperliquid and see the fees they generate, and like you can project out. I mean, right? You can make some extremely bold assumptions, as we see people do on Twitter every day, but you can see, okay, like this has fees that are attractive in a vacuum, right?
There's something promising there.
Like, it's like it's something that you see, and it's just like, okay, this gets compressed to like payments throughout the course of history. Payments and sort of this type of movement of money has been compressed, and a lot of it, like what we've seen with remittances and stuff, is like pure like just antiquated technology. Like we can wipe that stuff out very rapidly. So, anyways, but go on now.
So stuff like that is just kind of unimpressive to me. It's this narrative that has always been in the background for over a decade, and I don't see why it's interesting, even if it has some level of truth in it. And then you've got things like Tempo, which I actually think some of the smartest people in crypto are working in Tempo. It's really impressive, and I think technically the stuff that they're building out is actually really cool as a nerd to geek out on. But as you know, then I'm watching like the hype videos for Tempo, and it's like about, you know, how people are gonna pay for DoorDash with stable coins, and I'm like, come on, man. There's no way you guys believe that bullshit. Like, why would anyone pay for DoorDash with a stable coin? It's just dumb. Um, I'm sorry, I can't bring myself to believe that, you know. So uh, that's, you know, that's that. And then the kind of new hip version of that is agentic payments. Like, apparently I'm supposed to believe that AI agents are going to pay each other with stable coins, which I just don't understand why.
Accounts. They can't get bank accounts.
Yeah, I mean, I don't know, man. Like, my Codex has access to a virtual credit card. It's working just fine. I don't know, like, what to tell. I mean, it sounds like it's those kind of things that people say when they haven't tried it. Like, I don't get it. And there's so, like, everybody, you know, Stripe, Google, Visa, MasterCard, everybody has their solutions for how to pay with traditional payment methods with agents. Everybody, like, so why is Coinbase going to win this? It makes zero sense.
The agentic thing is very much, and this is like throughout the course of tech history, it's a narrative that it's kind of anthropomorphizing these like robots. It's like making these things seem like they're sentient people, and so they by definition need a way to pay, right? Because like they can't, right, like you said, they can't get bank accounts, so they have to, and this is like, I mean, we saw this in a microcosm with the first AI. Remember the chatbots that had all the coins, like Goat and all of those things?
Yeah.
It's like sort of similar in the sense that if you can create this idea around it, it like bolsters valuations, I think, significantly. Right, that's what it comes down to, right? And it's really a bizarre concept too, because it's already assuming that there's no, like, at the end of the line, there's no human direction for this stuff, which is like simply not true. Like, if it was true that you could just have it's like, okay, well then I'll just ask my, you know, Claude, make me a hedge fund as good as Citadel, you know, make no mistakes. Like, it's the same type of thinking, in my opinion, that has like bolstered this. So, okay, well then we've named reasons that the stablecoin stuff is sort of conjecture. Where do you see this like value proposition, to the extent that there is any?
Right. So then, but the really interesting thing though is then something like Hyperliquid really, in my opinion, can only exist thanks to stablecoins. And Polymarket is pretty much the same. Like, they're literally built on top of stablecoins. And I think, you know, the fun thing is, how many people even know or think about the fact that Polymarket is built on Polygon? I think it's like this forgotten fact. Most people, that thought doesn't enter most people's minds, even like the fact that it is on Polygon. Like, it's like,
no, yeah,
it hasn't. Nobody's like, oh, I'm gonna buy some Poly or Matic or whatever the native coin is these days in order to get exported. Like, it's like, who cares what the fucking database is? It's not even. I mean, it's in the fucking name of Polymarket, and still, it's like, it's not even entering anyone's consciousness. Because the real reason that it's doing well is, well, it's not the reason it's doing well, but the reason it was able to exist is not because of Polygon at all. It's because of stablecoins. Stablecoins are the real enabler for that. And I think especially now with, you know, stuff like, you know, the Genius Act and Clarity Act and stuff, it doesn't feel anymore like stablecoins are going to disappear tomorrow, which is what it used to feel like it could very well happen, that, you know, they're just going to get shut down and we're in this period of regulatory arbitrage or whatever. And now it seems like it's very possible that structurally they're here to stay, which means that a lot of these kind of apps that are, you know, not here nor there can now be built on top of that. And that's what Hyperliquid is. Like, why was Hyperliquid possible? You know, like, everyone loves to dunk on Carl Samani, and I think that's hilarious. But he's not wrong. He's not wrong in the sense that Hyperliquid is a custodial centralized service. That's just what it is. I'm not against that. I think that's great. But that's what it is. And the only reason that's allowed to exist is because of stablecoins. And I view that as good news. I think that's great for crypto. That's great for the stuff we care about. So that is what stablecoins are for. I think they're and a smaller but still interesting use case is the kind of gacha collector stuff, the Pokemon cards. That's also entirely based on stablecoins, basically. Nobody even, I think a lot of people who use those don't know, is it on Solana, is it on Polygon? One of the popular ones is on Polygon, and nobody knows that. Again, it just doesn't matter. What matters is that you pay with USDC. So I think stablecoins are valuable for those kind of things, not for DoorDash. I have a lot of ways to pay for DoorDash already, but for that they're kind of useful. So I think
Yeah, it seems like the stablecoins themselves are no longer this regulatory arbitrage because they are being more or less accepted. It's the applications they enable that are still sort of a version of regulatory arbitrage. But those will also just, like, Hyperliquid will be legalized, I think, in some capacity. I mean, I don't know what exactly that means, and I think it'll be interesting to see what that means. I mean, do you have any thoughts on that? But, like, where do these kind of end up, like, with regards to KYC, with regards to VPNs? Like, I definitely agree. They really lower the barrier to entry to create financial services applications. The stable coins themselves are no longer really like this massive, margin business. But where do you see this kind of playing out? Because, I mean, there's like stake.com has been very successful in the past, and they've been a benefactor of this. Like, is this something that gets just, we kind of keep pushing the envelope to the point where it sort of becomes accepted? I think yes, but I don't know if you have thoughts. Maybe with Hyperliquid is a good one.
So I think one thing that I think I have stayed steady on for many years is that the way I viewed Bitcoin specifically was that it's going to have these rolling use cases that are not going to stay the same, that it's going to enable like a thing, and that thing, if it becomes popular, will become legalized in some way, and then Bitcoin will need to find some new destiny after that happens. But at its core, it's enabling those things. Now, I think stablecoins are starting to replace Bitcoin for that. Like, the stablecoins are the thing that enables those other things that keep getting legalized. So, for example, a lot of OG Bitcoiners got to Bitcoin through Silk Road just because they were trying to get some drugs online. And now, in many places in the world, in the US, that's legal. And I think Silk Road and Bitcoin played a part in making that a legal thing. Similarly, when altcoins started like really booming in, let's say, 2016, for the first time that they really gained some mainstream attention, my take on that at the time was like, okay, well, I imagine what would happen is over time, listing on the stock exchange will become easier. Probably 24/7 trading is going to become more popular. Stuff like that are just going to become normal, and then you were not going to need altcoins anymore. And I think in a way that's kind of what's happening. Prediction markets and gambling are also getting legalized, I think, for the same reason. I can totally see, I think Kalshi is probably making the right bet on trying to do the regulated version instead of Polymarket, where they're mostly successful in the kind of offshore unregulated thing. Because I think that's just where it's going, right? But if not for Polymarket starting as an offshore unregulated thing, it would never have happened. So it needed to happen. Same thing with perpetual futures, which, by the way, were innovated on Bitcoin by BitMEX like fucking 10 years ago. But the I don't know what happens to Hyperliquid specifically, if it's going to get some form of a license itself, or if it's just going to drive others to get licenses. But I think it's pretty obvious by now that perps are going to be a thing that it becomes regulated eventually. They're just a product that people like trading, so it's it's going to happen. And then and once that happens, you can say, well, what is stablecoins for? And that'll be true. They're not going to be used anymore for perps once they become fully part of the TradFi world, and it will happen for sure. I don't think people will, the bullish path for Hyperliquid is that, in my opinion, is that Hyperliquid eventually becomes regulated and it becomes a big, US-based perpetual swap exchange. I don't think the bullish future for Hyperliquid is to dominate USDC trading, because that's going to be too small. But anyways, I think those use cases are going to keep coming up. It's not like we've discovered all of them. I think we're going to keep finding new ones, and that is, to me, that is the most exciting thing about crypto, that it enables those experimental things that eventually do affect the real world. And not all of them do, right? Like music NFTs are probably not going to be, the future of music, but some things will do. And that's what's exciting about it. So I think USDC stablecoins will help find this next use case. It is a little bearish for Bitcoin, though, because I think Bitcoin is no longer, and it hasn't been for a while, but it's no longer going to be the place you discover new use cases.
But I agree. I think it's been the case for quite some time, right? Like since Ethereum. So I think you're right that it doesn't really concern me looking at Bitcoin that it like that this stuff is not originating on Bitcoin. Obviously, getting it into more people's hands. I think you made a good point. You said you're wrong about everything, and I'm not bringing up a lot of good points you made, which was that a lot of people would like trade in the pair asset was Bitcoin early on, and then they would hold, and by definition they would hold a bit of Bitcoin, and then they may become lifelong bag holders, which is effectively what we collectively want if it really comes down to it, right? So
it was good for them financially.
Yeah, for sure. So but like that's kind of that's definitely like a past narrative of Bitcoin. Okay, I do this a bit out of order, but now another thing that you brought my attention to much earlier than I think, especially all of crypto Twitter noticed, was strategy in aggregate, but Stretch specifically. Now we're at a juncture. Okay, so we're recording this, and yesterday it was announced that Saylor sold 32 Bitcoin. I think that the way I'm looking at this is that Saylor rode down the last bear market pretty well, all things considered, and a lot of people were quite critical leading up to the past bear market that this guy's going to blow up. Like, and it's sort of weird how people talk about margin, and he's going to get like it's very a misunderstanding of what they're doing. But the notion was that he was going to blow up in some capacity, and almost every time that people have said Saylor's going to blow, it's been he's keeps going, wriggled out of this one again, right? One thing that is different now is he's like expanded the number of these things he issues. And so the financial engineering is getting increasingly complex. And even if still he can't literally be liquidated, he's like on 10x long on Hyperliquid, 800,000 Bitcoin, but it becomes increasingly precarious when there's all of these different notes issued, and it's very much a confidence game. So I'm curious if like where we're at now, is he going to wriggle out of this one, or are we seeing some cracks? I don't know. What are your thoughts? As someone who's followed this like quite closely, much closer than I think almost anybody else has, for what it's worth.
Yeah, so Stretch is actually one of the few things I think I wasn't wrong about, because I also, and I know that's what you're saying, but like I'm a little annoying with those things because I a lot of times try to hold like two positions at the same time. I think very early I was telling everyone, look, you got to look at Stretch, because I think Stretch literally is going to influence basically everything that is going on in the crypto market. If you're not paying attention to Stretch, then you don't understand the forces at play at all. So you just have to look at it. And I definitely believed and said many times that I think it's going to be a big driver for, kind of demand for BTC. I also said many, many times, which people were very upset at me for, that I think it's equally a very big risk for BTC. The more that it grows, it becomes like a real problem. And the thing with Saylor is he cannot stop growing the thing. That's something I'm not sure people fully understand. Like, he's forced to keep growing the fucking thing. So the thing is, even if I cannot tell you, is he gonna get out of this specific predicament he's in right now? Like, he might, he's done that many times before. But the thing is, if he gets out of it, he immediately starts inflating Stretch again. He immediately starts issuing more because he doesn't have a choice. So even if he, even if there's like some emergency and he skips that and he gets through it and the market trusts him again, immediately we'll start issuing more stretch, because he doesn't have a choice. And he has to. I think that the overall kind of CT narrative about Saylor imploding and selling his BTC is incredibly naive. It's naive not only because they don't understand the forces at play with him, like he's unlikely to sell a big amount of BTC whatever happens, but also for us as Bitcoin holders, the concern is not that he starts selling. The concern is that he stops buying, and that's something most people I don't think understand. If Saylor stops buying Bitcoin for, let's say, a month, even a month is probably enough, but if it's like a quarter where he doesn't buy Bitcoin, man, we are fucked, royally fucked if he stops buying Bitcoin for a full quarter. And he likes saying stuff like, "Oh, worst case scenario, we just wait out the storm. We stop buying. We just wait out the storm. We pay out the dividends, blah blah blah, and we'll be fine." Man, that's not true. If he stops buying BTC,
I know.
if he stops buying BTC, the value of his treasury, which is now supposedly 55 billion or something, is gonna go to like 20 billion because the whole value thing, it's fake. He can't monetize those Bitcoins. He can't. We already know that he's not gonna sell. So what is it like? What the fuck is that value? Anyways, I think it's like we know that whenever we see the Bitcoin price go up, we know that it's because he's the one buying, and I think everyone knows that now. So it's not, if he can only buy, and the only time that there's a bid is because it's him, then who is he going to sell to, even if he wanted to, right? So I don't think the risk is Saylor selling. I think the risk is Saylor stopping, not being able to buy anymore. And then you start to think, okay, so there's stretch. Let's say people lose faith in stretch. What is he going to do? Well, he's going to have to stop issuing stretch then, right? So if he doesn't issue more stretch, he's not buying more Bitcoin. And then what? So yeah, I that's the issue, of course, but it's very reflexive, right? So it goes the other direction too. That's why it's interesting.
I think if you were to look like it, really zoom out, and this is making some assumptions about the future of Bitcoin, which is basically necessary in this scenario. But if you were to really zoom out, I think, and also I think you believe this as well, I believe Saylor for the most. So hang on. I don't always believe him when he's talking about the financial engineering he's doing on a day-to-day basis. I do generally believe that he believes what he says with regards to Bitcoin. Like, I think he really does believe this is the apex asset.
I think he did.
Well, it doesn't matter now. The fact that, like you said, it doesn't really matter whether or not he believes it at this point because he's tied to it. But what makes you think that? Why do you think? What makes you say that he did, and you don't know if he still does?
Because
that's not very encouraging.
Because okay, here's a thought experiment, right? Let's say that Saylor wakes up tomorrow morning and has this revelation, and he's like, "Oh fuck! Actually, I was wrong. Bitcoin is like not going anywhere for whatever reason. I don't know. Like, the Lord comes down to him and tells him." So and he just changes his mind. Okay, what is he gonna tell you? Is he gonna tell you that? No, because he has to keep buying Bitcoin. Otherwise, strategy dies. He has to. He doesn't have a choice. So even if he truly, genuinely believes that Bitcoin is like dead forever, he literally cannot say that. And he can't imply that. He cannot start buying hype. He can't. The only thing he can do is keep buying Bitcoin. So if we agree on that, then why would we think that he still believes that? What is the evidence of him still believing? Because we know that he would act in the same way. He would still continue acting the same way.
You're right. It's kind of like Inception, where or almost like he has to will it. Even if he doesn't believe it anymore, he will. I don't know. I don't know that it matters. So I do agree. But from what I hear him say, I still think he believes this. But like, this is kind of okay. So let's put
Well, I
aside
mean,
for a second.
also, what is the thing that he believes? Does he believe that he's going to be able to monetize 4% of the Bitcoin supply? How can you believe that?
Well,
Like, there's no way.
So I'll give no, not monetized, but if he is taken at his long run views, then the notion, like, okay, so here's how I frame it. And again, this is making extreme assumptions about the future of Bitcoin. But let's say that in 20 years, Bitcoin is money, right? Now, like, what that means, we can put that aside, but it is the apex asset. It is money. Well, what he has done is purchased money for 10 cents on the dollar. So in the future,
Sure. But you would agree with me, right, that there is a point where he owns so much that that future can no longer exist, right? If, for example, he owned 70% of the Bitcoin supply, you would agree with me that that kills it, right? That kills that version of the future, right?
At some juncture, yes, but I guess in to me, it's like a game of, look, again, this is a very audacious claim here, but it's like a game of chicken with fiat money. If you truly believe that fiat is in perpetual decline and the scarcest asset is in perpetual uptrend, then you would spend the fiat, you would issue fake equity and buy the hard thing. Okay, so now again, this is making like some extreme assumptions about the future of this asset, but the goal, I think, is twofold. One, to your point about how much of the supply can he own, I think the idea, he does have to buy in perpetuity, but the price increases such that that number, that nominal amount becomes smaller and smaller over time. At some point, let's say he has 1.2 million and the price of Bitcoin is $1 million. Well, he can buy a Bitcoin a week. That's an extreme analogy, but I'm giving an example of where at least hopefully that it's large enough asset that, he can, I guess, like just hold that he doesn't have to buy as much, right? So the second point, though, is that with regards to like how much of the supply can he actually own and it still be viable? I mean, we're making some assumptions about the future demand. I mean, if you're right, like let's say in the extreme that demand comes from literally nowhere else, yes, like this whole thing's going to implode. But in my mind, that is somewhat telling of Bitcoin in general. And where I'm not convinced is that I'm not convinced that some portion of the supply owned by Saylor or Strategy really is massively detrimental to the vision in general. It's like, I think, the U.S. owns 5%.
If it was 70%, you would have agreed that it's
okay. 70% is bad. Yeah, 70% is bad.
So I think that 4% is already pretty bad. We all agree that 70% is very bad, right? I think 4%, I think he's already past where he should be, at least at this stage. So I think that this bet that he's making is he's trying to run the clock in the sense that he's hoping that he can keep raising capital and buying basically all of the float for enough time until there's no one who still wants to sell, essentially. And that,
right,
that is like not impossible. But what if he discovers that the point where he exhausted the sellers is much further than he thought, and in order to get there, he has to buy out like fucking 20% of the supply. Then he has another problem, right? So, and we don't know what the number is, but I think that already he's been going faster than is healthy for him. And people say, oh, this is bad for Bitcoin, like the supply centralized for Saylor is bad for Bitcoin. I don't think in those terms. I think eventually Bitcoin will be fine, but I think it's bad for him. It's making it difficult for him to achieve his goal because he's burnt a lot already. Like his sunk cost is already very high, and he clearly hasn't hit that point where everything goes vertical. So it's like it's getting closer. At some point, he gives up. I don't know what the number is, but at some point it gives up, and it feels like he's getting too close to that number, And I don't know what that number is, but we all know that he cannot continue doing this forever. At some point, something's got to give. Sellers have to be exhausted. Things have to go vertical, or he's going to lose. And I don't think he's doing those talks and showing those charts where he keeps doing this for 20 years, I don't believe that. I don't think he has 20 years. I think he's moving so fast. He's spending so much capital. He can't do that for 20 years. He can maybe do it for 2 more years, And then the question is it gonna happen during those 2 years? If it does, then he wins a lot. But if not, then I think he has to fold. I don't think he can keep doing this bullshit for 20 years.
What does folding look like in his case? So that's what I don't understand.
He stops buying. He can't raise more capital. He stops buying. Once that happens, MSTR takes a big hit, because then what is this company for, right? Goes below NAV, and then he tries to save probably Stretch, because that's his last hope of ever raising money again. And then the question is, can he, if he already gave up on propping up BTC and he gave up on propping up MSTR, what happens if he also loses the peg with Stretch? Then he's fucked. He's going to try, though, and that's the other part of the problem. His strategy, everyone in the market knows what his strategy is, because he doesn't have a choice. He put himself in this corner where his next move is always known, and the next move for everyone else is not known. So that doesn't mean it's impossible for him to win. It's possible, but it's, and now he's trying. He's trying those gimmicks. He's like, okay, I said I have a $2 billion cash reserve to pay the dividends. And now, like, surprise, actually, I was spending it to buy the convertible. Like, he's shifting his strategy a little bit. He's surprised he's bracket a little bit. But that's small.
Why I wondered. So I guess I wondered, and that was kind of the point I was making with regards to, like, last bear market. It was more straightforward equity play, right? And it was in the sense that, like, Stretch wasn't around and he doesn't have these dividends he has to service. So now do you think that had he just stuck with the pure play DAT, I guess, let's call it playbook?
No, he couldn't.
You think that was impossible as well? You think he had to issue
that's the problem.
Instruments?
That is the problem with the whole thing. He has to accelerate all the time. He doesn't have the choice he doesn't have the option of not accelerating. He has to accelerate all the time, forever. And which is kind of why this has to implode eventually. I think even in the best case scenario, it implodes after everyone gets exit liquidity, but it still implodes. There's no scenario where it doesn't implode, because the only way this keeps going is if he keeps accelerating. There's no way to, like, kind of gracefully shut the whole thing down. He has to keep accelerating all the time.
So, but that,
because as the Bitcoin price goes up, in order to keep propping it up, you have to spend more. So, like, there's no real, the only gambit, like the positive scenario for current holders is that he does manage to force kind of a vertical movement, and then we all get exit liquidity. Someone is still going to be fucked, though. It's just not going to be us. But that's the only positive way out of this for the current holders. There's no scenario where this entire thing doesn't blow up, though. It has to implode.
But that makes me think, okay, so like what I'm hearing, though, is that he has to accelerate in perpetuity, and after MSTR pure play equity, issuing equity to buy Bitcoin, after that was exhausted, he had to move on to the next thing. But to me, that makes it sound like the entire premise is entirely flawed, because you will definitionally have to issue beyond pure equity. You will have to issue convertibles, preferreds, then effectively dividend paying UST, Luna, mirrored asset type things. Like, you will have to do this. And so, first of all, that's not very, like, good. It's not very good for, like, that.
I think Stretch is Luna for all intents and purposes. The exact same mechanism. The only difference is that he's starting from having, less liabilities than assets, which is good. Right. He would have never had the luxury of that. But if he keeps going, he's going to eventually have more liabilities. He just starts from a better position. But if he keeps doing it, which he has to, then eventually he's going to have more liabilities than assets.
Yeah, I guess the only reason I push back, at least on people, the direct analogy is that there isn't this direct redemption mechanism. I mean, technically he can let it go to zero and he owes nothing. Like, and that's the case with all of the stuff he issues. Now,
that was true for UST as well. UST
Well,
technically
but
was
you
not a
couldn't-
liability legally, and he
Yeah,
did let
I
it go
mean,
to zero, and everyone lost their money. It's true. He can let Stretch go to zero, and then MSTR goes to zero, and then Bitcoin goes to zero. It's true. He can. I don't know how that helps me though. He
No,
can.
well, yeah. I guess no. I think the only thing was there was like look, with Luna, there was some very intentional misrepresentation of you can get $1 for every dollar of this. And at the
Right.
very least,
I agree.
legally speaking, MicroStrategy does not have to give $1 for every dollar of, or a Bitcoin backed dollar for every dollar of this, right? Like they can,
Of course,
the whole thing can implode. So yeah,
Of
no, it
course,
doesn't help.
But that is like it doesn't help anyone.
Yeah.
That's
I'm
like
splitting hairs, maybe. Yeah.
he's basically saying, well, I'm an honest Luna, and I agree, he is. But the mechanism is the same, the exact same. He's just saying, well, I didn't promise you that I will redeem your thing, and okay, that doesn't help me as a holder, though.
Yeah. But okay, so the one thing I had lost my train of thought before, but the last thing I will say about this has been very, I think, good conversation about the strategy stuff, and I think you say it like very directly, which is good. The last thing I would say is what he would say, and also his sort of few minions he has, and then the kind of unpaid help he has on crypto Twitter and then in TradFi, is that at some point, my point with saying, I forgot my point I was making, but at some point, if Bitcoin was to become money in whatever version that takes, MicroStrategy no longer has the most Bitcoin in the world. They just have the most money in the world. And the point I'm making here is, in his mind, and again, other people regurgitate this, whether there's any validity to it, they claim that, well, you can do a lot of things when you have the most money in the world. You know, if you just have a lot of money, you can lend it out. You can become a pseudo neobank thing, right? Like there are ways to make money when you have a lot of money. And in a future where the money is Bitcoin, and I'm in agreement with you that this is like, of the sort of spectrum of outcomes for Bitcoin, this is in like the 1/10 of 1%. And also the fact of the matter is there's like a duration mismatch here, which you bring up. Like there's maybe 2 years he has of this runway, and maybe 20 years Bitcoin is the, non-sovereign preferred store of value, digital, like apex, whatever you want to shake yourself off to, right? Like, so I'm in agreement that it is an audacious goal, but I'm just saying that is one potential outcome. It's probably unlikely in 2 years, like you say, but that is one thing. If you have a lot of money, you can make a lot of money. And that's what I think he promotes. And then some of his, like other people I hear talk about, simultaneously promote.
Let's say you were a company that has 10% of the gold supply, and that's all you have. You have nothing else. There's no business, right? There's no revenue generating business. There's no, I don't know. There's literally no anything. The only thing that there are no other assets. You don't also own real estate. You don't also have cash. You only have 10% of the gold supply. Now, look, having 10% of the gold supply is nice. It is nice. I wouldn't, if you airdrop me 10% of all the gold, I would not say no. However, is that a good growth proposition? Not really. Why would you want to own that company once it's valued at the value of its gold, and honestly probably less than that, because you cannot use it. If you own 10% of the world's gold, you can ramble as much as you want about gold being money. You can monetize that if that's the only thing you have. Nobody wants to have 10% of anything at that size, because you can't. You might as well own 1%. There's no difference between owning 1% of gold to 10. It's the same, because you're not gonna sell 9%.
Right.
So it's like I actually don't think it's that valuable. It's a little bit valuable, but he already has enough Bitcoin for it to be valuable. The reason he's buying more now is not because is not because once Bitcoin monetizes, he would be happy that he has 10% and not 5%. That's not why he's buying more. He's buying more because he has no choice. He would love to stop buying if someone else was the buyer now, and he could stop buying, but he can't. That's I guess the point that I'm making. He's not buying more Bitcoin because he wants to own more. He buys more Bitcoin because otherwise the whole thing dies.
Yeah, I mean,
He already has enough. He would love to diversify into other assets, but he can't.
Yeah. Okay, a couple of last things. This has been fantastic. I think I'm glad to hear it break down because I really think you follow this like very closely or closely, but then also you are able to articulate it well and like give it to us straight. So I think this has been good. Are you bullish about anything in crypto? So you kind of talked about these, applications and new use cases that can emerge that are enabled by like stablecoins, for example. Is there anything in crypto to be bullish about now, going forward? Like, is there another? Let me ask this: if we have another bull run, where is it?
So look, I know I've said a lot of bearish things about Bitcoin, but to be clear, I'm bullish long term on Bitcoin, for sure. And I think whatever happens with Saylor or whatever else, eventually I'm bullish. I don't know if I'm like, it's going to be 100 million per coin, but I'm bullish. Now, other stuff, yeah, I don't know. I mean, obviously, I think Hyperliquid is fantastic. I don't know if like the valuation is what I would consider low.
Right.
I think the price for Hyperliquid is roughly fair. I don't know. I mean, I'm gonna get dunked on when it's 5x's or something, but I think the valuation is like more or less fair.
Yeah.
It's great though. I mean, it's a great thing. Obviously, an asshole like me, I'm gonna say that I think collectibles are generally underpriced right now. I think they've had like this, I don't think that collectibles are necessarily the future of anything, but I do think they're underpriced right now. I think they've gotten a lot of shit. I do still think it's like an interesting use case.
I agree.
So
yeah, it makes, but this, I kind of thought that Zoomers and I thought that digital collectibles would have gained, like maybe this is how I'd say it. From peak to trough, I didn't think the trough would be so low. And
right. Well,
everyone
that always happens to us, right?
But no, but like I guess like, there's some CryptoPunks still have maintained some, floor. Like there's clearly some, marginal demand there. But it's like Pokemon cards and Yu-Gi-Oh! And other, like, what are those Labubu things, like the physical. But maybe an analogy would be that this cycle we thought that digital gold would just completely supplant acoustic gold, real gold. And it turns out that like gold still had some hands, right, and has done extremely well this cycle. And I think similarly, maybe we thought that digital collectibles would be the obvious next step, and that people have returned to.
Yeah, I get that. I'm still bullish on digital collectibles specifically though, because I think there's something that I think that with NFTs, I think we fucked up a lot of things, but actually digital collectibles, if you look outside of crypto, they're growing a lot, like a lot. They're massive. Like fucking digital items on fucking Roblox, printing. And
just had more decentralized stuff.
Yeah, the whole decentralized thing is, I have opinions on it, but I do think that like there's a lot of stuff that we've learned in crypto that is going to be applicable to digital collectibles in a mainstream way. I just think that the that's a whole conversation. We probably don't have time for this, but like I think that we just were directionally wrong about some things, but not on the big picture. I think people do like digital collectibles.
Yeah.
Do like spending money on them too.
Okay, one last thing. You've been down the AI rabbit hole, vibe coding. Like a lot of people don't realize this. Well, yeah, I guess. I think people don't realize that you actually have a technical background. And
right.
I guess because you don't really, maybe now with the AI stuff, people see it, but I guess, like how valuable is all this stuff? Not necessarily what you're building, but just like what you see. That's more like narrative farming. It's very hard to sift through like what's real. Like
how much is this unlocking massive ideas that simply could not be done prior to, vibe coding? Are there like hundreds and millions of people out there who now can build extremely useful things as a function of Claude code or whatever, right? That didn't exist before, because it feels very much like early crypto, with like a tremendous amount of slop. And I'm curious, like how have you been using these things, and like how useful do you find them?
I think building successful things is usually, at least part, it's a function of, what people like calling taste now, and also a function of pushing through difficult obstacles. And now the obstacles have moved further away from the beginning. Like a lot of times, for someone who has an idea, right? Like you're an idea guy and you want to try to do your idea, then the first obstacle is like, well, I don't know how to code. I need to hire someone. I don't have any money. I need to go raise capital, blah, blah, blah. That's hard. And then you do it, you get the capital, you hire the first person, and then you fight over some bullshit with him. And like there's like the human aspect, and then there's the technical challenges that come with it. Like there's a lot of challenges, and most people just like somewhere along that line, they just stop before they. And if they're lucky, they manage to build a thing, and then they realize they were wrong. They didn't have taste, right? They're wrong about that, and then they need to like be like, okay, well, now I need to like learn something from this and try again. And most people stop there. And so I think with like Claude Code and stuff, it kind of removed a lot of those issues a lot of those challenges from the beginning. So a lot of people can start. They're still going to produce slop though, obviously, because they still don't know what they're doing, and they're still going to eventually they're going to hit some challenge. It can be a lot of things, but they will hit some challenge and then they'll stop there. It didn't change people's tendency to stop whenever things get difficult. That didn't change. It just changed where the difficulty starts.
Yeah.
So, you'll see a lot of people like building fucking task manager apps and fitness counting apps and like calorie counting apps. Sure. But we've already had a lot of those,
Right.
So coming up with one, the right thing to build, and two, handling it when it fails, because it will, and trying again, is still the thing that is hard to come by, I think. That said, of course, those things are fascinating, and like for us at Taproot Wizards, everyone produces code now, which is like fucking amazing. Everybody who used to like be just a designer or whatever is like pushing code now. That's fucking awesome. And you can explore things much more quickly. Those things are great. And the tools are, but man, there's so much LARPing and bullshit on crypto and CT and just on X in general, I guess. Like, oh, you need to buy a Mac Studio for $6,000 and run an AI agent on your like fucking like. No, you don't. You can use whatever cheap piece of hardware you already have.
It's like you need to be you need to figure out how to be like the best prompt engineer ever, and it's like actually in 6 months. Most people who wanted to do this is not like some profession that's going to pay you $10 million a year,
Right. It does pay to be at the bleeding edge in the sense that you can probably use it for something. But yeah, the whole like I'm at the end of the day, I'm very optimistic and bullish on human nature just in general. And I think exceptionalism is something that is always going to be valuable. It doesn't matter. So like this whole bullshit about, AI is going to take everyone's jobs and you're not going to have a chance to build in 2 years or whatever. I don't think that's ever going to be true ever, no matter what. You will always, there's always going to be exceptional people doing exceptional things. And I don't think I will ever stop believing that. So, but what does it mean to be exceptional? It keeps changing all the time. It always has, and it's always been very difficult to predict what exceptional looks like 5 years into the future.
Yeah. Well, that's like quite some optimistic framing to end on. So thank you for taking the time. It's been fantastic. Appreciate you coming on.
Thanks, man.